Hello, everybody. This is Erica from the Classy Climb blog. Thank you guys for joining me today. This is almost like a Freedom Friday show. I'm super excited. Today, I have Kareem Baldwin out of New York City of Affordable Financial Services. He is a mortgage lender. I know you guys have been asking all these questions, and we're ready. We're ready to get your questions.
We're here.
Jump in on the live. Kareem, say hello to the audience.
What's up, family? It's Kareem Baldwin, live from New York. Ready to chop it up with Erica. I know I've been a fan of hers in the shadows for a while, so just glad to be here and ready to help.
Sorry, I got a little bit of feedback on my extra monitor. Okay. Hey, guys. So Kareem is here because there's been so many people. So I've got one person say, SP Latino says hello. Kenny Tucker says about time. SP Latino says, I want to jump in onto the stream. So you guys are hyped for the day. I appreciate that. Appreciate that energy. All right. So here's the thing. We're going to throw in some of the average everyday questions I get to Kareem. And then if you guys have questions, put them in the comments. I am on the live chat and I can see the information and I can give it to Kareem. So Kareem, you already know. What do we need? Here's the basic number one answer. What do I need? I want to buy a house in the next 30 to 90 days. What do I need, Kareem, to purchase a house?
The first thing that you would need is definitely a credit report. Definitely looking at your credit score. Of course, we have minimum scores. We have loans that, you don't need the best of credit. For example, I have a 550 credit score program where that's, a typical government FHA loan. The only difference with that program is that you'd have to put down 10%. So if I had a 550 and I have to put down 10%, if I go to a 580, I have to put down only 3.5%. So to put down that additional money, you're just better off working on your credit. If you're in some type of time crunch and it's mandatory that you get something done, then I definitely understand. But my recommendation would be, hey, if you have that 550, 560, don't just worry about the 550 doing 10% down. Definitely improve your credit. At least get to the minimum of a 580. That sweet spot where you're going to have, the best pricing, best incentives is going to be a 640. That's like the sweet spot where you can kind of maximize the amount of money, your purchase power. So with a 640, you're kind of at that threshold of maximizing your purchase power. Anything below that, it's a little tricky. You can go above and beyond, but it's not going to be as high as if you have a 640 credit score. So I would say with a 580, you're looking at, being able to use about 45% of your max gross income. I should say your monthly gross income towards your mortgage. So 45% if you're at a 580, and then if you're at a 640, now you're able to use 57% of your gross income towards a mortgage. So that's a big difference. When you're talking about, that's a difference between buying a house of 300,000 compared to 425 or 430. So it's definitely a big difference. The credit score is number one. I would say 640 is the sweet spot. Anything below that, there's definitely programs available, but 640 is definitely going to get you the best interest rates and all the programs available.
I love that. That's clear and concise. At 550, you can even get a house.
550 is 10% down. 550 is 10% down. So at this point, there's no excuses. All the programs are there. It's just knowing the information, doing your own research. I always tell everyone, it's great to get information from me, great to get information from you, but you definitely want to verify what we're telling you. Definitely do your own research on the side. It's a team effort. The mortgage person, the real estate agent, whoever's helping you out, it's definitely a team effort. We can only move at the same pace. So if you're not able to help us out, it's only going to slow down the process. So everyone being informed, everyone, being excited, being motivated is definitely the way to close your transaction as quick as possible.
So another question I get a ton.
Yes.
I'm a military vet.
Yes.
Or I'm just a person and I want to know about no money down. They see the signs. I'm in Texas, so I'll give everybody a preference. On the side of the road, they have these signs: no money down, zero down for your house. Get in your house, zero down. You make $4,500 a month, get in your house.
Yes.
tell us, dispel that or tell the truth, or let us know how is that possible.
Well, that's just great marketing, great advertising. Because if you put, 0% down for veterans, then you're kind of limiting the amount of people that will respond to the ad. But if I put no money down house, I may get, 300 people. Then I kind of say, hey, this is for veterans, but I have 3% down. I have 3.5% down. So, no money down is great. So that's just an advertisement. The only loan program available for no money down is the veterans program. You have to be a vet, a military vet. You can be active duty military also. So you don't have to be, out of the military. You can still be in the military and still be eligible for the VA loan. But that VA loan is the only loan that's available without having to put money down. So that's just a marketing ploy. You get people in, you put no money down, you get a bunch of people that respond. Hopefully some are veterans. The ones that are not, you kind of let them know, hey, we have grants, we have this. So not no money down, but little money down because I have a grant for you. So it's just a way to, bring business in.
Gotcha. Because I see those signs all the time and I go, what about closing costs?
Yes.
The real estate agent in me is like, what about closing costs, people?
Yes. So
or even if I see USDA loan signs, I'm like, closing costs, people.
Yes.
Closing costs. So just to kind of get that out there in the air, I like that question is like a very high question. So I always try to get it out there. All right. Something that I heard you say on another show that I think is so important. Now, a lot of times on this channel, we're talking about how to make extra income on the side. So sometimes some of my clients and some of my viewers, they've been kind of hustling. They've been kind of doing eBay, Amazon, flea markets, driving for Uber. They've been doing this for about 5 years, sometimes 4 years. What can they do as a business owner, quote unquote entrepreneur, to qualify for a mortgage? How many years? Sometimes people say, do I need to bring 2 years tax return, 1 year? How many years of documentation do I need as a business owner for 4 or 5 years?
So yes. So we can do it 2 ways. So if you've just started, first off the bat, you have to be self-employed, whether you want to say a business owner or 1099, subcontract, whatever you want to classify yourself as. If you get a 1099, you are in that self-employed box. So first off the bat, you'd have to be self-employed for at least 2 years. That's just number one. So if you just started out in your business, you're going to need 2 years before you can even kind of start looking into the programs. Now, different businesses, but it has to be 2 years for that specific business. So it can't be, hey, I owned a business 5 years ago. I own a business now. It's my first year. Is that seasoning going to transfer over? Or is that job history transferring over? It's only about that specific job because they know, lending wise, being self-employed, it's very tricky. So to combat that, we've created a program where if you've been self-employed for 5 years, instead of having to document 2 years of income, because that's what you would need if you're self-employed, you would only need 1 year of income. So for example, if I've been making, $50,000 a year in my business, had a great year 1 year, I made $100,000. Instead of me having to average your 2 years of income, I could use the $100,000 to qualify for you. So you can actually set it up where you're structuring your tax returns just for the mortgage. You can say, hey, you know what? I don't show a lot of money on taxes, but for this year, I'm going to show what I need to show to go ahead and, qualify with only using 1 year. And I don't know, I saw a New York Post article about a lot of New York people, a lot of stock guys, hedge fund guys. Everyone's wondering, how are these guys? They did a report that the richest people in New York City are qualifying for all these housing grants and housing programs and all these lottery programs. And it's simple. They're only documenting that they're making only a certain amount. So they're saying, okay, to get a grant, I need to show 75,000. I'm going to show I make 75,000, even though I make, way more than that on paper. I can document this amount. So that's kind of, skating the ethical lines. So kind of go at that at your own risk. But that is, people are wondering, how is that happening? Why is this happening? Because people have ways to supplement their income. The richest people have businesses, the wealthiest people, they have businesses, they have write-offs. So even though you can kind of take what they're doing on a bigger scale, and then use that on your own small scale. Okay, I'm not showing $100 million, whatever. I make 50,000. So let me do what I can do with that. But you can still use all the tools in the toolkit. You just have to know what's going on.
That is perfect, because I hear so many people say, oh, it's a trick, it's a scam. These wealthy people are getting these special loans I'm not getting. And it's about documentation. I meet people several times who are making $100,000 or $150,000 at a barbershop. They own several barbers, but then they claim down to 40 grand.
Yes.
You cannot get the mansion claiming 40 grand.
Yes. But what you can do is claim the 50 or 55, get a multifamily, get a grant. Because I know with grants, you have to make under a certain amount. So if I say I have a barbershop and I made 150, so that means I have some money. I'm going to show a smaller amount, maybe do a multifamily and kind of use some of that rental income to supplement. And then I get a grant also. So like I said, again, these are kind of skating the lines, because for me, I think of grants, people that kind of need it the most. So, but again, it's kind of just,
I'll touch on that. Here in Austin, Texas, they had the program they created, Homeowners Down Payment Assistance, which is in many areas. And it was originally started for poor people and people that lived in Section 8 in the projects. Well, they could never get these people to come. They'd hey, come to the class, come to the class. I went to the class personally, and I was in there with a bunch of Chinese people who had just immigrated to America. I was in there with a bunch of white college students and some other types of college students. And I was like, a program that was originally created for, it could be anybody, we could say black, white, whoever, that they lived in Section 8 or they lived in the projects, were not showing up to the actual class. The city had no choice but to still offer the class.
Yes. We have it big in New York too. By the way, we have a lot of times, because the grants, you have different housing grants, and on multifamily homes in New York, they're giving up to $60,000. And that's for down payment, that's for closing costs, that's for repairs. So these are homes that need a little bit of work, but the state is saying, we'll give you the money for the work. And they had grant money left over. Well, they were saying, hey, we can't have people in this box. So they're going to do a new grant cycle in September. And they were kind of saying, well, should we do another grant? Because we had money left over, and the state's kind of coming down on us saying, hey, what's going on? You're giving out grants. You're not able to make them work. Why should we continue your funding? So the grants are available. It's very important to reach out there, do your research, reach out to the local mortgage company, reach out to me, reach out to a realtor, reach out to someone, find out what is out there, because they're kind of giving away money. It's just who's going to take advantage of it.
Who is going to be proactive instead of reactive, right? Because these are two different things. And I talk about the whole Austin thing is the program showed the city, if you paid your mortgage payments on time for a full year, they actually waived it, because originally it was $7,000, now it's $15,000 they give you for a down payment. But if you made 12 on-time payments, they waived the loan. You didn't have to pay it back.
Wow.
So this is essentially free money, because they're trying to compete with the cost of rising costs in Austin.
Yes.
Well, here's the crazy part about it. It's people who are like, I just don't know. And in these moments, are you being proactive or reactive? So there's a lot of articles being written recently about a lot of the black people, a lot of musicians having to leave Austin because they can't afford to live here anymore. Well, this has been happening for the past 10 years.
Yes.
Several people got ahead of the curve, right? They moved further north, they moved further to the edges. You have to be proactive and not reactive. And so that's why I wanted to bring you on, because you are available in all 50 states, correct?
I do have, my primary location is New York, but I do have contacts in Texas, a couple of different states. So I do have contacts in all 50 of the states, but my primary locations would be New York, Georgia, Maryland, Virginia, Connecticut, Massachusetts, and Florida. So those are my... That's
hilarious, because that's a majority of the people who ask questions on this channel.
Like the entire...
Maryland's always in the house. If you're on the watching the channel right now and you're in Maryland, put it in the comments. If you're in Florida, I have like 28 clients in Florida. If you're in Florida, comment. If you're in Georgia, comment. North Carolina too.
Jersey too. Jersey, Connecticut, kind of that tri-state, East Coast area. All of those states are covered.
I remember having friends who were they left East Carolina University for college. We were done with college. They would go up to Virginia, work a year or two, these high-paying government jobs and go, I'm out of here. This traffic sucks. This sucks. Come back to North Carolina, qualify for one of the biggest houses ever. Funny, but I loved, like, that intrigued me about real estate and mortgages. And how do we do that? You know, so that intrigued me for sure. So I have several people asking questions, so we're going to try to get to some of their questions. Okay.
Okay.
So we're going to go back up here. I see all you guys' questions. I am definitely going up into the stream. Kenny Tucker asks, and Kenny Tucker is in North Carolina, do I need 20% down to get an investor loan?
On a single family, yes. 20% is what you'll need.
Okay. Okay. Ebony Hayes, also in North Carolina. I have a 680 credit score, 1K in cash, 7K in credit card. Is that sufficient?
She has 1K in cash. That would not, well, you know what? It depends on the size of home that you'd be looking for, the loan size. She has the credit score. She only had $1,000. I would say for her, she's more than likely looking into getting into one of the grant programs. Now, the grant programs are state specific, so she definitely want to contact a local real estate agent in North Carolina because they would have it, and then I could still help her with the loan. So she would want to contact a local realtor in North Carolina, or she can just Google housing grants, first-time home buyers, North Carolina, and everything will pop up there. They'll give her the requirements, and she'll, because $1,000, I don't see what you're going to get with that. It's not even, I don't even.
North Carolina has a lot of, so you're in New York, but just to give you a comparison, North Carolina has a lot of townhomes for under 55,000. You can get a single in the edges of town for under 50,000. Our bigger homes in some parts of North Carolina are like 150,000, 4-bedroom, 3-bath on an acre, but it's out on the edge. You know what I mean? It's on the edge of town.
Okay.
Right. So, but they're fairly new. So North Carolina has a little bit of wiggle room in pricing. Florida too. I have a lot of clients here that are in Tampa. So they got a lot of $60,000 properties in Tampa, but they'll still need some work. So just to give you some numbers, right? So.
Okay. So I would say with that, again, you're looking at whether you're doing a 3% down, 3.5% down. So if you say you have $1,000, then you're going to need a minimum of 3% or 3.5% down. So kind of calculate that and see where you stand. I would technically try to get at least 5,000 if I was in one of the cheaper areas, whether that's, you know, money from retirement accounts, work, because a lot of people have jobs. They've been working there 20 years. You got to have something in that 401k, 403b, even if it's 10,000. There has to be something in there, some way for you to pull out a small portion of that, plus whatever money that you had on your own, and you can kind of make it happen that way. But I would say I would want to have at least $5,000.
So one of our questions is, how do brokers look at student loans when getting a mortgage?
Right, that's a good question. So if you're a veteran, we don't look at the student loans. If you're not a veteran, they're going to use 1% of your student loan balance for your mortgage payment if you are deferred or you're not showing anything for your student loans. So what my recommendation is, I usually tell people, is to contact the student loan company and work out a payment plan with them immediately. Even if you're saying, okay, I'm not making a lot of money, or, you know, my payment's going to be zero with them, you need that paperwork to show zero, because if I pull your credit and I don't see a payment for student loans, I have to hit you for 1% of that balance. So that's just the guideline. So if you can get paperwork stating, okay, my student loan payment's going to be zero per month, now you're zero. So they look at it as that if you're not making a student loan payment now, we have to hit you for 1%. So my suggestion is that you work it out with the student loan company first, get documentation saying your monthly payment is zero or whatever it's going to be, and then you start for the mortgage that way. So definitely work out the student loan first and then go to the mortgage second.
So for example, if it was a $50,000 student loans, that's a lot of student loans, but if you had it, and 1% would be $500. So it's just an example. Most people, the average American, I think it's 20,000. So we'll go $20,000 is your average student loan payment in America, average student loan debt in America. So 1% of 20,000 is $200. So they're gonna, you know, if you say you make $5,000 a month, they're gonna tack on that, right? You know, minus your student loan payment. So,
yep. Sorry, I'm just. think you're frozen. So Erica's frozen.
Kareem, are you there?
Yes, I'm here.
Apologies. We had a little freeze here. Apologies, everybody. For the question I was on was, for FHA loans, do I have to live in the property to qualify?
As a primary home, yes, you will have to live in the property. What happens after you get the loan, that's up to you. But again, it's kind of ethical rules. Don't want to try to get anyone in trouble. Don't want to try to get the banks in trouble. But you will have to live in the home to get an FHA mortgage, yes.
So what I've personally seen when I worked at H&R Block for a brief time was there was a woman who had purchased a home FHA, and then it needed some repairs. Like a little hurricane came through North Carolina. For about 6 months, she wasn't able to stay there, was, doing these repairs between insurance and her and getting stuff back and forth, mold or whatever. By the end of the year, she moved out and was able to say, I did live there for technically a year, and now I'm renting it out because, these issues. So if things happen where people are working on properties and different things like that. So, but you can, so let's say I get FHA, Kareem, and I'm there for a year, but I want to move to another side of town. What would I do to qualify again for another mortgage?
Another FHA mortgage or mortgage?
Another FHA mortgage.
Okay, so FHA now has a 100-mile rule. So if you're going to try to get another FHA loan, it has to be a minimum of 100 miles away, and it has to be some type of job situation, housing. It has to be something legitimate as to why you're leaving that house and then going into another house. So any type of job change, contract, any documentation from the job. Hey, my mom, my family, my mom, my grandparents are living with me now, so I need a bigger house. Here's the paperwork documenting that they have to live with us. So it's all about telling a story. So everything has to make sense. But one thing is that the house will have to be 100 miles away. That's number one. And then number two, if you're going to try to use rental income to qualify in that house, you have to have at least 25% equity in the home. So that's kind of the hiccup that get a lot of people. They may buy the first FHA loan. A year later, depending on your area, I don't see you getting 25% equity in a year if you only put down 3.5%. So you may have to wait a few years to get that other FHA loan, but definitely make sure that unless you can qualify for 2 loans, if your income can support it and we don't have to use rental income on the property you're leaving, then you don't have to worry about the equity. But if you need that rental income, that house you're vacating will need to have at least 25% equity in it, or else you're not going to be able to use that for rental income.
Okay, so someone has a question, Kenny Tucker. How can I use the rent to increase my income? So let's say he's in a house right now. He wants to buy another property. What's the rules about the rental income and how it can go, can add to your income?
I'm just trying to make sense. So he owns a property now. This is hypothetical.
He owns a property right now, and he got in on like a teacher program. He's in on the program, and so he's been in that house for a long time, but he wants to buy a rental now. So when he goes to the bank to buy the rental, let's say it rents out for $1,000 a month. How much of that income at the end of the year can he say, 75%, 80% will be on his, they'll add to him?
It depends on the loan program. So if you're again, like we just spoke about FHA. FHA is going to use 75% of that rental income on the proposed rent. So but again, you can't buy a rental property for FHA. So we're going to scrap that.
So he'd have to go conventional.
Yes.
He'd have to go investor.
Conventional will want their use the market rent. So let's say the rent is getting $1,500 a month. They're going to add the $1,500 a month to your income. So whatever the rental income is what they'll use. But of course, you have to account for what your new payment's going to be. So whatever's left over is kind of what they'll give you for income. So if your mortgage with taxes, insurance, everything comes out to $1,500 a month, this place gets $2,500 a month. When it's all said and done, you'll have an additional $1,000 to qualify towards your income on the loan. Does that answer the question?
That totally answers the question. That totally answers the question. I mean, because that's the number one question. Most people are like, well, I want to buy this place and I'm going to rent it out. You know, how can that, help me or not help me? My biggest thing I tell people is don't buy the new car. Get the house. Don't go crazy with their furniture. And then if you're really serious about investing in real estate, in a year from now, invest in that property, then go buy your trinkets, right? So really, this is just a year and a half wait, just calm yourself. I see a lot of people get the new house, new car, new stuff inside. And I'm like, wait a minute. We don't get it all at the same time. So
just to jump in, I know we were talking about self-employed people. I kind of want to jump back to that for a quick second. So with self-employed people, of course, you have your business accounts. Well, these are for corporate people that have corps, S corps, C corps, LLCs, any type of documentation having a different name. So what people do is they'll have their business account. They'll have certain bills and expenses that they'll pay out of their business account. It may be a personal item. So for example, your car loan, let's say your car loan is $300 a month. It's on your personal credit, but use it for business. And every month you pay your car loan out of your business account. So after the year, if you go do your taxes and you put on there that you have your car payment expenses on there, everything matches up, and you have a year of doing that, they'll remove that from your personal debt. So that $300 a month won't account for your personal. It'll actually be a business expense. So you can qualify, $300 more per month. Does that make sense?
That makes total sense. I'll give you an example, a story here. A guy who does Uber and Lyft, when I was delivering pizzas back in the day, he had a business bank account.
Yes.
And he called it Steve Services, and he paid his car payments out of it, paid his cell phone out of it. And so at the end of the day, he qualified for this really big house. And I was like, how? And I'm glad you brought that up, because that is how he was paying for these things out of a business account, and his Uber money and his Instacart money all went to that one account. So that was his business's money and business's expense, the car and his.
If you have the car loan, you do it that way, or anything on the credit report, any credit cards. You can just say those are business cards, and then again, like I said, you can deduct that from your account. Don't go crazy, don't do everything, but the car, 1 or 2 cards, that makes sense. But don't just use everything like, oh, it's all business, because again, it's all about telling the story.
The thing I tell people is forming a habit of making your business have a foundation, an EIN number, an LLC, put yourself as S Corp if you need to. CYA, of course, always consult your attorney or accountant. But having that account, and I work with people who, I've been in business 10 years. Well, do you have a business bank account? No. Yeah. Well, the day you start that business bank account is what they're counting, because where's it been the past 10 years? I don't know. You don't have documentation.
You definitely want to make sure you have the structure of your business down correctly. So even if you're 10 years, you got the time to start now. Definitely make sure that you have that corp, LLC, whatever it is. Make sure you have that paperwork in order for your business. Even if you Lyft, Uber, even if you're selling ice cream on the weekends, whatever it is. If you have a business, you definitely need to make sure you get that incorporated. One, because of your name, your branding. Because again, if you have a great name for your business, but it's not incorporated, and I come in, I can take your name, because that's not a real name. That's just, I'm going to say, hey, you took my name. My business is incorporated. Yours is not. So you actually took my business name, and I'm now can sue you to stop using my business name. So definitely for ideas, because we know with our people, we have great ideas, great stuff, become a great invention.
Ideal's a million. You gotta push.
You gotta protect it. Yes, definitely protect your ideas, protect your business name. You have a good name for your business, incorporate it. Even if you have a business that you don't know, you're not gonna start it yet. Incorporate that name anyway. Get it started. Because again, if you lose that name, it can change a lot of things that you want to do. So I have a lot of stuff that I have set up in the future, years and 2 years out. I already have those names incorporated because I don't want anyone to take those names. I just don't want to lose them. Everything is structured around it. So I'm, like we said, we're being proactive and not reactive, which is that's a prime example of exactly what you said, being proactive. You know what? I'm going to spend the $300, get it incorporated. And that's in New York. Other states are cheaper. And
North Carolina's 125.
Oh, okay. Yeah. So
125.
Yeah,
you know, you got different numbers all over the place.
Yeah, that's 2 Fridays is not going to happy hour, and you have your 125 right there. So
exactly.
That's it.
And people hate hearing that. But you know, that's so funny you said that, because I have been the past couple of years I get the LLC, I get the domain name, I go buy up all the options of the domain name.
Yes, domain, that's important.
I created a film festival once.
Oh, okay.
I did it for 2 years. And then the rest of the years we just been in planning, or stuff didn't go right. So we just had it sitting on the shelf. Somebody came by years later and asked me, could they buy it, because they were going and they started trying to go buy domain names and do other things, and they hit a roadblock.
Yeah.
Because I think they would have tried to do it anyway, but when they realized everything, domain names, everything, I had it all. So I always tell people, I'm like,
yeah,
even on YouTube,
that's a big money making business. People just buying domains and selling them.
Yes. Flippa.com. It's a website called Flippa.com.
So that's big. I even think Trump did that to one of the politicians.
Jeb Bush. That's my number one thing. I go buy your name. Because right now there's a ton of Erica Williamses. But I bought every variation I could, right?
Yes.
Even if it's misspelled, it doesn't matter, because most people misspell my name. And so I bought Erica S. Williams, Erica this, Erica that. And to this day I have people they have Erica's Fitness or Erica Williams this, and they can't. They got this long, ridiculous domain name because I've already bought it.
Yeah. You have to come see the point. So who knows, if another Erica Williams becomes president, they'll be hitting you up for the domain, or someone famous, whatever it is. When you blow up,
that is a true statement. Here's the thing about it. On YouTube, there was several Ericas, right? So I just started creating crazy amount of videos. So I'm at 1,000+ videos now. So no matter when you Google me, let's say you're trying to Google one of the other Ericas, she's an author, this other Erica does singing. It doesn't matter. I come up first, and I think it's hilarious.
Yeah, that's branding. That's branding. No, that's knowing your brand. That's staying on top of your brand. That's great.
It's been fun stuff. So I'm going to read off a couple more comments. I see your comments. I see you guys are coming. I promise I'm going to get
let's get some more questions. Let's try to bang out a couple more here quickly.
Yeah. Miss Casita 2008 said, hey, everybody. Miss Casita is from Florida. This guy, I don't know how to say your name. I apologize. Is from Maryland. Porches B is from Florida. Ebony Hayes said, do you service North Carolina? Tampa's cheap. West Chapel, Florida is where it's at. Kenny Tucker said, what is the lowest mortgage loan can be? Is it 50,000? Is it 40? What is it?
Usually the banks want 75. Anything lower than that, you're kind of dealing with a smaller
local banks or small banks,
like a credit union type of thing. But again, if you go to Wells Fargo, Chase, they'll do the smaller loans. If you walk into a mortgage broker or a mortgage lender, they're not going to entertain a loan of 50,000. It's just the amount of money spent to do a mortgage now. The cost of mortgages is at an all-time high, just getting the loan closed, the amount of moving parts. So a $70,000 loan, they're just not going to do that loan. But if you deal with certain banks like a Wells or bigger bank, they'll do any loan size. They don't care. And they'll have the same requirements. They'll have FHA, but they may not have the lower credit score requirements. So again, if you have a smaller loan, then you definitely want to make sure you have that 640, 660 score. But if you have, 125 and above, then you can kind of go with, that 550. But those boutique places, they're not going to go with, a $50,000 loan.
Yeah, I had some clients that said they couldn't get a $19,000 loan.
Yeah, I don't know about all the mortgage companies out there. I'm just speaking, to my understanding and my experience. But again, you possibly could find someone out there. That's all part of doing your research.
Okay, so we have Miss Flowerbomb says, any advice on commercial loans?
commercial loans, as advice as far as what?
Let me see, like its requirements to be approved.
Okay, so with a commercial loan, it all depends on the type of commercial loan that you're going to get. So a great tidbit is that you can actually get a commercial loan as a residential loan. So if you have a building that, I don't know if they have these in Texas, maybe they do, maybe they don't, where you have the housing up top and the
Yes.
store on the bottom.
North
So,
Carolina, South Carolina, too, Georgia, yeah.
okay, so yeah,
Very
so
famous.
let's say you find a building that has 4 units of housing up top, has like a little small store on the bottom. So if the residential space is 51% at least, then you can qualify for a 3.5%. It's an FHA loan. So you can do commercial with as low as 3.5%. If you don't have that, it's just a regular commercial building. You're looking at that 20 to 30% down, depending on the interest rate. I do have no income check commercial loans. Those interest rates, of course, are going to be higher, and they're going to want at least 30% down, 40% down, depending on the type of building. So when you're talking about commercial, if you can't find a space where you can qualify as residential, you're definitely going to need to have sufficient funds to buy that commercial property.
I mean, that's good to know right there. That's like spot on, because 30% down, no income. Some people would really love that. I mean, I have a few people I know would love that.
If you, we're not going to worry about your tax returns. All we need is your bank statements to show that if you have a commercial building now, it would just be the bank statements to show that, you know, you're bringing in whatever money from that commercial space that you're saying. And then if you want to buy it, you just need the down payment, and we'll use the proposed rent to qualify you.
Got you. Okay, so Joe Wilson says, do you have to apply for an LLC before you invest in real estate?
No, you can buy real estate at any time. People just use that as like kind of an asset protection. So it's kind of not under your name. The problem with LLCs in real estate is that you can't go get a mortgage with an LLC as a primary home. You'd kind of it'd have to be an investment. So they'd kind of look at it as like a commercial loan. Now you're looking at much higher interest rates. So you can't get an FHA loan and then say, okay, I'm going to put that property in an LLC. They're going to get aware of that, and then they're going to send you a notice that your loan is now due in full. So don't buy a regular house and then try to put in an LLC. It's not going to work that way, because you have a mortgage. So you have certain terms to your mortgage where you can't just transfer that property.
Transfer, yeah.
To an LLC. Yes. So when you're talking about LLCs, that's going to be more cash deals. That's going to be commercial real estate, because you have a commercial property, you can close in an LLC. So that's going to be commercial stuff.
That commercial is good. We'll do a video later on commercial, but I like where you're going with that information, because I have a lot of New Jersey clients that come into the show. But we'll do a video on commercial in the future, if that's okay.
We can do that.
Yeah, because I think that's like a whole nother segment of great stuff, and I don't want to suck up all your night, right? So
we can talk here until tomorrow.
Yeah, because I'm like, this is good stuff. So I'm like, I'm gonna break that into another segment. So I have Joe Wilson. Oh wait, sorry. I'm skipping some people. I apologize. Miss Casilla said, do you know any loan programs for correction officers? Now, I know in Texas and sometimes in North Carolina, in some cities, they have a like hero program.
Yes, we have the same thing in New York.
Program. Yeah.
I have that in New York and a bunch of the other states that I'm in. It's called Home for Heroes. So basically, the only difference in the program is that the loan officer and the realtor, they're kind of lowering their commissions to help you out, to help out the hero. So, you know, we'll give incentives where we'll pay for your attorney fee, or, you know, we'll give you a couple $1,000 towards your closing. So it's not going to take away from your other programs. So you're still, you know, 3.5% down. You're still 3% down. I have a 1% down program. We even have that. So I'll talk about that after. But yeah, it's just in addition to. So those programs are in addition to, but we do have the Home for Heroes. So if anyone, I guess I can put my email in here, and then we can
what we're gonna put all his links in the information floor. You know how this show works. We put it in the descriptions, and we also put it in the comments. So when you guys come on later, you can see it.
Yes.
Joe Wilson said there are a lot of properties in PA, I'm assuming that's Pennsylvania, in the city for $55,000 to $90,000. How would I finance? Is PA also like that, where it has to be $75,000?
That's just the lenders in general, but again, you can find a local company that will have no issues with a $50,000 loan. They may want 5%, they may want 3% or 10%. So once you're dealing with smaller loans like that, it's kind of a case by case basis, a lender by lender basis. So when you're talking smaller loans, just make sure you have all your paperwork in order, make sure your credit score is where it needs to be, have your money in order, whatever it is, and go get the mortgage.
Got you. So we have a question that might throw us for a loop here. William still says, if I'm a mortgage lender and I sold $1 million in loans underwriting, how much money / loans do I need to sell on a secondary market, such as Fannie Mae requirements?
I don't even, as far as what though?
Let me read the second part. I don't know. That's the question. William Still, give us some more information on that.
Why are you asking that question? I don't get it. I don't know. He's asking how much money he would make if he did $1 million worth of loans.
No, how much does he need if he sells? How much money / loans do he need to sell so he can get on the secondary market like Fannie Mae? I don't know. That's interesting.
Oh, that's like mortgage banking stuff. That's all state regulated.
Gotcha.
So you're gonna have to go to the state licensing websites called NMLS. You just Google NMLS in your state. They'll have all the state requirements for banking, servicing. So if you want to be a servicer and do that with loans, so those are special requirements. I would definitely just go to NMLS. I don't think it's NMLS.com, but just Google NMLS and it will have all of these state requirements for whether it's servicing, you want to be a mortgage broker, mortgage banker, a lender, all of that information is in there. So I think that was his question. I don't know though.
Yeah, that sounds about right. Yeah, that's definitely all the information. That's a full information. Nicole Janice, which Nicole, you might have to just contact Kareem directly.
Okay.
But I'm gonna read you her question. I want to buy a duplex for $650,000 in Los Angeles area. Okay. FHA, first time home buyer. If I can get $2,700 rental income per month, how much do I really need to get approved for?
Well, again, yeah, that's very income specific. It's just going to be based on your credit score. But what we can do is use 75% of that rent. So again, but everything's going to be based on the market rent. So FHA has their site where you search by county, by year. I put in the area. It's going to let me know if it's a 2-bedroom, 1-bedroom. And then with all that information, it'll let me know the market rent. And then I would use 75% of that. So again, if I do, I think you're frozen again, but I'm just going to keep going anyway.
I see you. You were frozen and I was frozen. I don't know. It's crazy.
What was the rental income she said? 27?
She said 2,700, which 75% is like 2,025.
Yes, 2,025 would be added on to her income. So depending on what she was making, depending on what else was on her credit report, there's really no way for me to answer that specifically without seeing what your current income is, what's on the credit report, then I can kind of work the numbers from there. So definitely email me. I don't remember that person's name. Please email me.
Nicole Janice. I'm sorry if I spelled it wrong. I apologize.
Oh, Nicole. Yes, Nicole. Definitely email me. I'll get you set up. I'll get you pre-approved so at least you know exactly what you're working with. I see a lot of people, they kind of go to the store, which would be the realtor first. We kind of do it the other way. You come to us, the lender, the wallet first. So you kind of can determine how much money you do have, and then you go to the store. So my thing is with me, when I know how much money I have to spend, I'll go to the store with confidence. I'm happy. I'm motivated. I stay in one section. Even if I'm a clearance guy, I only go to clearance. You know, I don't walk around to the expensive section. I only have $100, so I'm going to clearance. But if I don't do that, now I'm in the store for hours, walking around, calculating, looking to see what's going on. I'm confused. I'm frustrated.
You're trying to get a small steak.
Yes.
You're trying to get a tiny steak. I want this.
Yes, but if I know I'm a clearance guy, I only go to the clearance and I'm looking for steals. I'm going for everything I could get. I'm picking up 5 different shirts, so I'm excited. You definitely want to determine what's in your wallet first, before you go to the store, which would be Erica or any other real estate professional.
Oh yeah, I mean here in Texas, they won't even take you on a tour without a pre-approval.
Yes, we have the same
They just want
thing.
to do it.
Yeah, my fiance is a realtor, so we kind of do our business the same way. So we kind of don't want to do that, and it's for the client too. We never want to show you things that either is too high or too low for you, because you may be looking at a house of 200,000, but depending on the taxes, depending on the location, you may be able to go to 400,000. So you never want to sell yourself short, whether you never want to go too high or you never want to go too low. So you definitely.
Oh yeah, it devastates you. It devastates you to see the house of your dreams. We don't make the money. I would never want to do that to somebody, a couple, they have to go home and go to sleep with that or argue with each other about that. I find that to me, that's just ugly. Like, right. Yeah. Every time I see the twin brothers or whatever on HGTV do it, I'm like, I get why you're doing it, but you can see it in their face. Like they are devastated.
Oh,
right?
I know. Cause even for me, I have like a team around me. So a lot of the day-to-day stuff I don't really see anymore. But even when I hear about it, it's still like, man, that's crazy that, that had to happen. So it's for us, we're only human too. So I kind of internalize.
It happens. Yeah, it happens.
The deal doesn't work. I'm like, oh man, we got to call this person. So just very unfortunate. So you definitely want to make sure that you go see what's in your wallet first before you go to the store.
Exactly. My raisin says, can I get a mortgage for a rental property if I don't have a job? Is there a no-doc loan? My credit is excellent, but no taxes. Can I get a commercial mortgage? What will be needed?
You can get a mortgage, but again, you'd have to have money for down payment, and you have to see that if you're down, the proposed rent will cover the mortgage payment since you don't have any income. So your only income would be rental income. So it's possible, yes, you will need to have significant money to put down though. So if you say you don't have any money or a job, then real estate it's not the time right now. I would, focus on the job, whatever it is. I don't know if you're retired. You say you don't have a job. I don't know what that means.
Or make a business, call it a business, do some business stuff on the side.
Make sure you
kind of look like
something to get some money, unless you already have money and you're retired. That's a different story. But yes, you can get a loan if you are technically not working, but you will need money to put down.
For sure, for sure. So I have another question from my raisins one. Do you finance in New Jersey, Pennsylvania, Connecticut, and Massachusetts? I'm pretty sure we said yes earlier, right?
Yes, we do.
Okay. Because the person is saying they have money. They're just trying to see how to get in there. My raisins, I would definitely contact Kareem. We're going to have his information up here. Contact Kareem, see what he can do, right? Dwayne Wyatt. Can I use my VA loan to purchase a rental property?
I'm going to say no. You can, but we'll just go with no.
We want to do it the right way, right?
Yeah.
We want to go into the property. The government has given us this money set aside for you to have a home and to combat veteran.
Rental property, why would it be a rental property? That's what I don't, if you have your
so
VA.
Dwayne, totally go ahead and give us some more information. Do you already have a home and you haven't used your VA yet, or what? Because, my mother's going to buy another home. So I guess that next one will be her VA loan and their old house will be a rental.
Doing the same thing, but they're actually buying a bigger home.
Yeah.
So I'm saying, okay, use your VA now. So they're doing it that way too.
Mm-hmm. And we have a 30-second delay. So sometimes we'll ask people to respond and they don't take a second. So Property Brothers. Thank you, Kenny Tucker. Property Brothers. Okay. So if I skipped anybody, I apologize if I didn't see you. It's got a lot of stuff in here. But any other questions, you guys throw them in there. So Kareem, what was what we were going to come back and touch on?
The 1% down program.
Yes, there you go.
So with that loan, your max loan amount has to be $417. No multifamily, so only a single family home, condo, co-op, townhouse. So the house has to be zoned as a single family property. The minimum credit score for that would be a 700. Now with that loan, it's actually a 3% down loan. You only put 1%. We give you a grant to cover the other 2%. Same thing, free money. But of course, you have to be within certain income requirements. So you have to be within the median income of your area. So if you guys email me, I can send you the link, and it'll let you know the income requirements for your area to see if you can be eligible for that 1% down loan. So that 1% down loan is a little bit stricter. They kind of don't want you maximizing the amount of income that you're putting towards the home. So if you're being very conservative with the property that you're buying, then that loan would be perfect. First time home buyer, of course, only, but that's a great program that's been flying off the shelf.
I was sorry about that. I was saying, while you're talking about first-time home buyer doesn't always mean first-time home buyer, correct?
Yes. Every 3 years, you are a first-time home buyer.
Every 3 years, you're a first-time home buyer. I like that. I mean, there's people who probably move. You know, I don't know if you remember Armand Montalong or whatever. He was down here in San Antonio, and everybody kept saying, why is he moving every 3 years? And I was part of before he got in trouble. But anyway, he was on HTV, flipped that house. But anyway, someone had asked the grants for multifamily. Was it had to be owner occupied, those grants?
Yes, these are all first-time home buyer, owner occupied stuff.
I'm making notes for when I write my blog article. Okay, owner occupied. So I feel like a lot of what I'm seeing is, if you've never purchased a home, there are opportunities for you to get in a fourplex. There's opportunities for you to get in a triplex. You know, even if you got that big old house at $400,000, you can rent the rooms out. Here in Austin, we have a guy who has 5 rooms in his house. He's not married. He rents all the rooms out. And he lives in this giant house that overlooks, you know, a great part of Austin. But it's like, everybody always like, what's up with that? He calls it the man palace. It's kind of funny. But there's many, many opportunities there.
Yes.
So yeah, Kenny Tucker, again, 30-second delay, so you're probably going to hear it now. Even if you already own your first home, you are a first-time home buyer, because I think he's owned some maybe 10 years, he was saying in the comments. So I think it's important for people to just get in contact with a mortgage lender, correct? Like,
yes,
get in contact with you.
That's the first step. Get in contact. Definitely look at your credit report. Go to free annual credit report or annualcreditreport.com. Get your free credit report. See what your scores are. If you need credit repair, contact Erica and get your credit where it needs to be, and then contact me and you'll be good to go.
So how long is the process, right? So let's say I contact you this week and I'm like, here's my documents, here's my taxes. You know, what is the process? Walk me through how long a process usually takes with a mortgage lender.
So the first process, kind of you're first starting out, hey, I want to buy a house. That process, send all the paperwork. That's going to be 24 hours. So send me your paperwork on Monday. My team will look everything over. We'll get you an approval letter on Tuesday. Then you go look for the house. After you find the house, you do all that stuff. The mortgage side is going to take about 2 weeks if all your stuff's in order. So if you've been listening to us and following our videos and following our Instagram and paying attention and doing exactly what you need to do, the mortgage will take 2 weeks tops. What usually takes the longest time is waiting on the sellers to want to move out. Of course, your contract will have a specific closing date. So it's all based on your contract, because you may sign the contract today and it may say, hey, closing dates in 60 days. So that means that you're going to close in 60 days. Your mortgage will be done before that, but then is there really a rush to be done before that? So it's all about your contract. When you're talking about already owning a home and now refinancing, now that's going to be 2 weeks because we already have everything. We're not waiting on anyone. It's just us.
So refinance is going to take 2 weeks. It's just you guys. You're checking that out. Do you guys also do that? You also do that, refinancing?
Yes, I do a lot of refinancing. Yes.
Okay. Is that a cash out refinance or what type?
Yes, cash out. I know Texas, you can't do that in Texas, right? Cash out.
You can do, it's some particular rules we got going on down here, but there's some rules.
Yes, I do a lot of cash out. So you can do cash out refis, and with those credit score requirements, that's the same thing if you're doing cash out or if you're purchasing a home. So you have a 580, you can do cash out. You have a 550, you can do cash out. So those credit score requirements for either purchasing a home or doing, you know, cash out if you wanted to refinance your current mortgage.
And so it's up to about 85% when you cash out, right? So let's say the house is 100,000. You guys aren't going to give me more than what, 85,000, you know?
85% on FHA. If you're a veteran and you have a VA loan, you can actually do 100% financing or cash.
Okay,
out.
veterans.
So if you're a veteran,
Okay.
you have a loan now, you have some equity in the house, you want to take that money to buy another property, definitely you can, get another VA loan, cash out, refi, 100% financing. So if your house worth 200, you owe 100, you can get a new VA loan of 200,000.
Nice. I like that. I might send some people your way because I know they're trying to buy another house. They got the VA stuff.
VA is the way to go.
So Kareem, I love it. You talked about refinancing. You talked about 1% homeowner down payment. You talked about the timeline for it. Everybody, this is an informational video for you to take action. So either you can get on my side and jump and get your credit repaired. Let's see what's holding you back. And some of you might already qualify for these rates, right? Some of you might already qualify for some of these programs. So I definitely would recommend you reaching out to Kareem. Kareem, give us some of your information. I'm still going to put it in the links below. We're going to message each other and get those information. But I want people, if they want to reach out to you tomorrow, what's some of the information they can do to contact you?
Okay, so I have two websites, my email, phone number. So I'll start with my first website. So if you're what we consider a hero, so if you're in law enforcement, you're a veteran, if you're a teacher, if you're a firefighter, if you're in corrections, if you're in EMS, any of those programs, you want to go to intheknowheroes.com. So intheknowheroes.com, and then of course we can just put that in the description box. If you're everyone else, you want to go to intheknowmortgage.com, intheknowmortgage.com. And then my direct phone number to my office, this is my personal line. So, don't blow me too much up, guys. That's 631-233-8713. So that's no assistant, no team. That's me directly. 631-233-8713. And then my email is kbaldwin, which is my first initial K, my last name, which is in the display, at A as in Apple, F as in Frank, savings, like a savings account.com. So kbaldwin at afsavings.com.
Nice. Love it. Short, sweet numbers. I like it. Kenny Tucker, of course, says, please put in the description. Ebony Hill says, thank you for the info. I will be putting this in the description box. I will also be putting in the comments because sometimes you guys don't read the description box. So it'll be in the comments as well. Not his phone number, but his email address and some of his information. Now, his full information, of course, will be over in the blog, classyscl.com. If you guys haven't signed up, you need to. It's where all the good news comes from. It's where all the Freedom Friday specials come out.
I need to sign up for that.
So basically, Kareem, thank you for your time. I know you're in New York. I'm in Texas. We made it work. I want to bring you on and I want to talk commercial property with you because I feel a lot of people in the audience, sometimes they see that property or they want to own a barber shop or they want to own something and they want to get their feet in the water, right? So I want us to come back and do a show on that, okay?
Yeah, we can talk all things commercial next time. We'll talk about schedules. I'm doing a lot of other speaking engagements too. So
I know you are. You're a busy man. Thank you for your time.
And let's make it work.
So I'm going to close it out, but I also have Tina Jackson says, thank you for the great information. My Raisin says, thank you for the info. I will reach out tomorrow. He is in NYC. So thank you, My Raisins. Hit him up. Kareem's good people. Everybody, this has been Erica from the Classy Climb blog. We have Kareem Baldwin of Affordable Financial Services out of New York City. He takes great photos. His lady's pretty. She's a real estate agent. He's in the know. This is the guy. Kareem, wrap it up and tell everybody goodbye.
Again, guys, thanks for having me. Erica, thanks for having me. I love the platform, love what you're doing, informing everyone. So it's great that other people in different states can come together. One common goal, empowering everyone. So using real estate to empower yourself, using your credit to empower yourself, using the information that we have available to empower yourself. So thanks again. I can't wait to come back. Lastly, can you text me the blog on your information and I will sign up, register, everything after.
Sounds good. I will send it to you. All right, everybody. This is Erica from Classy Climb blog. Guys. Hey, if you guys liked it, like it again when it renders. If you guys want to share it, share it.
Yes, share it, everything. We'll talk soon, Erica.
All right, later, Kareem.